Yeah, I like the logo. Okay. This is I can't wait for it. And today we're gonna go ahead and start with space. Excuse me. Space just had their third successful launch. In their first launch in the last 2 years, manned two-man spacecraft up into 45,000 feet, carried by a larger jet or plane, and then engages its rocket thrusters to get into the out in outer space. Successful launch on Saturday, and so the market is up another $3.50. So we jumped in on this back was at 511 before it jumped up, and we plotted a line here, and oops, sorry, we plotted this trend line here, and it's just breaking down what I see in the market. And so there's a trend that follows right here, where price action pretty much butts up against as it comes down, and then when price action breaks that trend line and goes away from it, and then comes back down and touches it again, that's the end of the downtrend usually, very close to that. And so it gets broken right here. I'm going to grab this arrow. It gets broken right here. Price action comes up, comes down, meets back on that trend line right here. And so now we have this angle that's going to be created. Once this one stopped, this down angle here stopped with this movement here, then you look for candles that arm up and kind of reach past the previous candle to kind of create like an angle going up. So that's what this trend line here is doing, the solid green. And so now if I made a copy of that, which I did, this dotted one, and I just moved it over to these candles that popped up over here, that trend line is predicting the angle of this movement going up. And so there you go. Now you see it right there. And it still holds true to the pre-market trade right here at 25.67 is sitting up right over here. That doesn't mean it's going to stop here. It could keep going. But that idea of this trend line is that it's trying to get it to follow the trend line up. And if retail jumps in behind it and pushes it up higher, then even better. But here's probably what's going to happen is once market opens, everyone's going to, we can't sell for their profits and try to take their profits. But I see a much bigger picture than what everyone else is seeing, I think. And I think this is going to just keep going up like this. And so, consecutive $3.50 jump ups, in the last 5 days are definitely a sign of that being true. So I've got about 30 days left on this option call. I'm going to let it ride, and this price action is probably going to come about halfway down or maybe all the way down, close the gap, and then go back up. Not a big deal, but basically you just got to think of it as like this is opening the door to higher profits. This is just kind of testing the waters up here. We can't get out, reaccumulate, gather up stronger hands or institutional buy those shares, soak up the float, and then watch it ride back up. And so now I've also broke this down into the curve and Wyckoff methodology. So stage one is your PI or your AKA the buyer's climax before it starts to distribute down and try to find new cheaper shares. And so this is the last one up is where this is. So that's stage one. And so then stage two would be the the automatic response, which is also distribution. Once you get up into this area, and so they distribute out all their shares. It bounces. This is like kind of like an up thrust, and then it comes down again to do a secondary test. And basically, it's like three waves: boom, 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 and that's when retail is basically jumped in, pushed down to get it to the deeper shares, and institutional buying has shorted these shares to get it to come down even further. So if anything, price action has to come back to this area right here, which is the 35.72 area. Bless you. And um, so that way they can break even on their shorts because they don't make money on the shorts. They make money on the move going up. They short just as a tool to get it down. So that's their cost. Their cost is shorting it down to get it to cheaper shares, and then breaking all the stop losses in this area down here in the liquidity area, and gobbling up all those free shares that now because they broke those stop losses or people got scared and let go of their shares. And so now that they have more float, then they try to ride it back up for free. And so they don't really spend a lot of money up. They just let that, they let retail ride that up for them. So that's where we're at right there on retail side. So anyways, so this distribution going down is stage 2, which is also the major sign of weakness. Once it gets into this area down here, it goes away from it, comes back and touches it again. And then it creates that one leg up, is what I call one leg up, where the price action, the new low is a higher low than the previous low. That is the safest place in the market to get in. And so that's what we usually wait for, is we wait for this trend line to be broken, come back, launched again, come up, bounce off of a new trend line that's making a higher low. And then at that point, that's where we get in. And if it does it again on that same trend line, that's another place you can get in at. And they created 2 higher lows on that movement right there. And then price action jumps up, and hits the top of this trend line. And it counts off, come back down, fill in the gap, and then run back up again, or reaccumulate and then run back up. Or it could just keep going up if retail gets behind it and doesn't let go of their shares. So that movement right there would be called stage 3 and 4, which is thrust after distribution. And then the up thrust after distribution, it rides the upper Bollinger Band a little bit, and then or it just hits it one time. It just really depends on retail. The riding of the Bollinger Band up is retail jumping in and getting behind it and not letting go of their shares. And then once retail gets to a point where they start to run out of momentum, institutional buying will dump their shares again to run it back down to the last point of structure, which is the top of this curve usually. Worst case scenario where it says enter here at 1617. But usually where this gap is right here, on the top of that curve, or that cup and handle or whatever, that's the last point of structure. So around $20. So you might see this come back down, hit $20. And then because this jumps up like this, the bottom Bollinger Band is going to run up to the $20 area. And so this is going to come down and hit that $20 area, also hitting Bollinger Band, and then creating what's called the spring. And so it launches off this area, which is also the liquidity, is the final dip of liquidity. Stop losses for the last week or so that's just been created by these new investors are going to be below this area. So as it dips down, it's going to go into this into liquidity to break those stop losses, free up those extra shares, drop the old contracts that they have, and pick up new ones, cheaper ones, to run up for a new profit as well. And again, they have to get back to this area right here, which is the $35 area, in order to break free of these shorts that they created down up there about a month ago. So price action is going to get up to that point, whether it be overnight in a long wick and it hits it and then dumps off all their shorts to break even on, and then runs back down, reaccumulates, and then runs up for a new high again. It's always a possibility as well, but that would be the game. So after 3, 4, you have the spring, and after the spring, you have the new run for the new high or the buyer's climax, which is the same as this, which is what I was just saying right there, where it might dip down, reaccumulate, and run up for a new high as well. And then those are my predicted trend lines going up right there as well. And that's it. It's going to be a very good run space. I mean, my only regrets is that I didn't have more of these. But very solid trade, and still not too late to jump in. I'd wait for it to drop down, maybe fill in this gap, and then reaccumulate to get back in. Potentially hitting that $20 area again, which would be a $5 drop from here. That would be the best place to get in, I think, if you're not already in. And that's it. Looking for good things to come from this company. I think that it's just going to be keep going like this. So just finding places to get in and jumping in, riding it, is going to be a good run. So anyways, I can't wait for it. If you got any questions, people comment below, like, follow, subscribe. It helps me keep doing these, and I will talk to you on the next one. We'll get the right one here in a second. Where is it? There it is.